Hey guys, how's it going? It's Andy from Go Investing. Happy Wednesday. Right before I hit record on this video, I got some horrible news. The Patagonia that I bought for 60% off is out of stock, so I'm going to try to keep it together for the rest of this video because we have some important topics to go over today. Before getting into today's actual topic, I have to go over some of the news events that have happened so far this week. One of the big things that Wall Street has been focusing on has been the stimulus package that could be coming in the future. The last one was the CARES Act, and so far it looks like this one is going to be the HEROES Act. The need for all the politicians to make all of these bills and acronyms is kind of ridiculous, but basically what you need to know is that both sides, the Democrats and the Republicans, are kind of arguing over some of the smaller details. The important things to know is that every American will be getting $1,200. That's every American with an asterisk. Basically, if you got one the first time, you should be getting one again. And there will be additional payroll protection, which is the PPP. And so at this point, we're kind of waiting to see what's happening with that. There seems to be some discussion over what should be included in that, and that turmoil has pushed the market down on Tuesday, but it's going to be something to watch going forward. On this channel, I've talked a lot about some of the worries that I've had with the overall stock market. And one of the things I was kind of identifying is the fact that a lot of the analysts, when it comes to earnings reports, are flying blind. As the pandemic hit, many of these companies cut their guidance. And so these analysts don't really have a lot of numbers to go off of to have predictions for the earnings reports. And as we get into earnings season, we're pretty much right in the thick of it right now, a lot of the analysts don't exactly have some of the best information out there. And instead of having what I expected was going to be a lot of misses when it comes to earnings reports, it turns out that the analysts have been actually more pessimistic than is what's actually happening. As a result, we are seeing a record number of beats when it comes to earnings per share, around 83%, when the average has been in the 70s. We've seen this with some big companies recently. We had stuff like Microsoft where they beat expectations for a lot of the parts of that report, like earnings per share and revenue. But the outlook is kind of what the market has been looking at. So it's going to be something to watch going forward. This week we have some very important earnings. We had McDonald's on Tuesday that came out and had some not so great numbers. They had a 30% drop overall in same-store sales. And then they saw a 60% drop in their net income overall. And as a result, that was kind of what was weighing down the Dow Jones the most, as McDonald's, ticker symbol MCD, was down around 2.6% on Tuesday. And so while in this video, I'm going to be talking about two stocks that I think could double in 2020, I'm still waiting to see what happens when the dust settles after these earnings reports. And the day that I'm specifically pinpointing on the calendar is going to be Thursday. Thursday is when we have a lot of the massive tech companies that have been pulling the market up so far in 2020. On Thursday after the bell, we're going to have earnings reports from Amazon, Google, Apple, Facebook. These are some of the major market movers, and we've seen 85% of companies have been beating expectations, but if the outlook going forward doesn't sound as cheerful as maybe the market expected, we might see a major sell-off in the stock market in the next couple weeks. But I'm going to be waiting to see what happens with that before I decide what I'm going to be doing next with my stock portfolio. So before we get into today's topic, I have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, you've been enjoying these videos. I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. In the last video, for the first time, I asked for a goal when it came to likes with 100, and you guys blew it out of the water. So for this video, let's put a goal of 125 likes. Thank you guys all for so much support. So in my last video, people did not seem to totally love some of my picks. They thought that they were a little bit too conservative, or they were wildly risky when it comes to picking financial stocks with JP Morgan and an airline stock. So in today's video, we're going to be talking about a little bit more speculative when it comes to these stocks. In this video, I'm going to be talking about two cheap stocks that I think could double in 2020. The last time I made this video was just a couple weeks ago when I was talking about Sonos, ticker symbol SONO. And this is currently my only major position that I have open at this point. And so while these two stocks that I'm talking about today aren't actually a part of my portfolio, it's mainly because I'm waiting to see what happens with the overall market. The first stock I wanted to talk about in today's video is going to be SiriusXM, ticker symbol SIRI. Currently, SiriusXM is trading for just below $6 and is down around 17% year to date. And before you kind of click off this video because you're like, SiriusXM, you're like, who still uses that? Just hear me out. SiriusXM is a company that has many of these satellite radios that you'll find in many cars. They own Pandora, and they've been very aggressive when it comes to their investments in the past 12 months. They've made major investments into places like SoundCloud, and then they bought the podcasting platform Stitcher for $325 million, it would have some major personalities on there. So SiriusXM seems to be breaking away from just satellite radio, as they've seen a drop in their subscriber base overall. But the fact that they have the SiriusXM for the cars, they have Pandora, and now they're branching into SoundCloud and podcasting, shows that the company is trying to diversify overall and increase the longevity of the company. Overall, I do expect to see some chop when it comes to SiriusXM. As I've talked about recently with a lot of these social media companies, specifically Snapchat and Twitter, there's a lot of uncertainty when it comes to advertising spending going forward. We really don't know how much money is going to be pouring into advertising with the pandemic, the fact that major movie releases, sports are kind of up in the air at this point. So there's a lot of uncertainty based off of that. Also, SiriusXM is very reliant on car sales overall. And during the pandemic, we've seen some horrible numbers when it comes from automakers and just the auto industry. We had the major plants for stuff like Ford, GM, being shut down for around 2 months. And the overall industry has fallen to levels that we haven't seen since the last financial crisis. And at this point, we're seeing around a 40% drop overall. But if you go into the fine print, I do see some very positive things in there. Many of the drops that we've seen in the auto industry has been coming from fleet sales. And retail sales, which are just like me and you going out and buying cars, have been recovering a lot quicker than these fleet sales have been overall. And so it seems like the demand is coming back for new cars and used cars overall. And what this means is we're starting to see a shift in how society kind of moves. At this point, people are starting to go back to the jobs, and I'm not going to be arguing whether that's a good thing or a bad thing, but at this point, public transit might not be the safest option. And similar to what we've seen with the change in demand for housing, we might be seeing a shift overall as the demand for cars increases in the near future. And so as I said, this is a lot of speculation, and my prediction is that car sales are going to be ramping up towards the end of the year. We've seen a steep decline of around 30 to 40% in March, April, but that demand is starting to come back. And I think as we get later into the summer, we're going to see the numbers are going to be pretty surprising as they start increasing back to the pre-pandemic levels. Recently, SiriusXM has made a deal with Verizon that will include their system in a lot of the newer models of Audi products. That's just another positive news story. They're already a part of many additional plans that can come on for many of these automakers, and it seems like they're the leader in the satellite radio sector, and at this point it seems like they don't want to give that up anytime soon. But their diversity of products, branching out to stuff like Pandora, the acquisition of Stitcher, and their investments into stuff like SoundCloud makes me feel pretty good about the company overall. Pandora has been a bright spot when it comes to SiriusXM overall, as more people are spending more time at home because of the pandemic, and their listening time has been increasing significantly during this period. During the last earnings report, they actually saw some pretty good numbers. They saw a slight dip in revenue overall, but it was still a 12% year-over-year increase in that revenue. And so things look pretty good. And when I put up the revenue chart overall, you can see the steady increase recently, besides that last quarter where it dropped, and as I mentioned, still a 12% year-over-year increase. And so it's pretty nice on that aspect. So far, the company has done decently well in 2020, and it'll be very interesting to see what happens from the earnings report that comes out on Thursday. We can only go off information that we got from the first quarter as of right now, but the company did a lot better than analysts expected. And if that happens with quarter two, I'm going to feel very bullish about SiriusXM, ticker symbol SIRI, for the next 12 months. And so if the earnings report comes out really positive, I might hop on board and buy into SiriusXM. Also, if the stock falls as a result, I might also buy in. So either way, I'm going to feel pretty good about it. I just kind of want to see the numbers of what's happening overall. Quarter one was a positive when it comes to the earnings, and so I'm curious to see what this next quarter has in store for SiriusXM. So SiriusXM is not a sexy stock, and it's not something that's going to be talked about a lot, but I'm very curious to see what you guys have to say about my analysis and what do you think about SiriusXM, ticker symbol SIRI, in the comment section down below. All right, the second and final stock on this list, I'm used to doing videos of like 3, 4, 5 companies, but it feels kind of weird to do too. The second stock in this video is going to be Nokia, ticker symbol NOK. Currently, Nokia, ticker symbol NOK, is trading for $4.30, and it's up 15% year to date. So when I talked about speculative stocks, 5G stocks are pretty much the most speculative that I can think of besides of the vaccine stocks. 5G has just become one of these words that gets thrown out a lot with these telecom companies. It's one of the main reasons why I'm a shareholder of AT&T, mainly because I really don't know what's going on with 5G, but I want to be a part of it. And anytime I look up 5G information, I see Nokia in there, and that was one of the main reasons why I decided to put it onto this list. But if I'm looking for a company that's going to be doubling in the next 6 to 12 months, Nokia looks pretty good for that, and then when I put up the AT&T chart, it's probably not going to be AT&T. So with Nokia, you have a lot of uncertainty. The company has been in a pretty steady decline for the past around 5 years. But when I put up this quick little chart, you can see that it was in a nice channel going down, and some of the momentum has pushed that out of the channel, showing that it is in a bullish trend. And so while technical analysis for a company that's been kind of beaten down for a while is not the best overall, when I look for buying into a stock that's been beaten down for a while, I look for a very solid catalyst that you can identify to kind of make some reasoning behind why you want to invest in this company. And I think 5G is the main reason why Nokia has become attractive again. So far in 2020, or at least for the first quarter that from what we've seen, Nokia inked around 70 commercial deals when it comes to 5G. And so that is a pretty nice trend. Also, some of the things that we've been seeing out of China with Nokia has been very surprising. So far, they have a 90% or 90+% win rate when it comes to earning contracts in China. This is an area that has huge competition when it comes to the major Chinese companies and some of the European giants. But so far, that 90% win rate looks very positive. And so while there's a lot of uncertainty when it comes to kind of the infrastructure behind 5G, having this positive success rate in places like China makes me feel very good for Nokia going forward and makes me hopeful that they'll be able to lock in more than the 25% that they have with 4G infrastructure when it comes to 5G. As I mentioned, the chart does not look beautiful, but in the past 3 months, the stock has been on a solid uptrend, and it has broken through kind of the downtrend, the channel that we've been seeing for Nokia for the past couple years. And so that catalyst with 5G and some of the positive numbers that they saw from their first quarter earnings report makes me feel pretty bullish on the stock overall. When you're looking for stocks that are going to potentially double, sure, you can find these stocks that have been doing pretty well for a long time, but they're pretty cheap. This would be a stock like Zynga that has just been steadily increasing for a long time. But it's usually easier to find these diamonds in the rough for companies that are well established but have had a tough time recently. When it comes to Nokia, a lot of their problems is they have overpromised and underperformed. And going from the transition of 4G to 5G, this could be an opportunity for Nokia to take back some of the market share that they potentially lost during the last iterations of the 4G networks. Overall, Nokia has a lot of risk associated with it, as it is a very speculative stock. But so far, the numbers that I've been seeing so far with 5G looks very promising. And with speculative stocks and 5G in general, it's kind of a crapshoot at this point. No one really knows exactly what's going to be happening with that. And so Nokia, because of its cheap price and the well-established company that it is, and the numbers that we've been seeing with 5G so far, it makes me feel pretty bullish on the company overall. Let me know what you think about Nokia, ticker symbol NOK, in the comment section down below. So overall, this was a pretty different video than what I normally do. Normally I talk about these well-established companies that maybe have had poor earnings recently, and I think they could be a good opportunity. But the people have asked for me to talk about more speculative stocks. And in today's video, I wanted to go over 2 stocks I think that could double in the next 6 months, or at least in the next year. And in this video, I decided to go over SiriusXM, ticker symbol SIRI, and Nokia, ticker symbol NOK. These are both stocks under $10 that I think have fantastic upside, but obviously there's a lot of risk in these cheap stocks. So let me know what cheap stocks you are looking to buy in the next couple weeks, and let me know what you thought about these 2 stocks I talked about in today's video. I appreciate all the support on the channel, and I will see you on Friday.